I just tested AMDW using my new drip score system, and the results were honestly surprising. Because usually when you see the high yield ETF paying weekly income, you expect major NAV decay, weak long-term compounding, or taking the cash to outperform drip. But AMDW did something very different. Not only did the drip score come back strongly positive, the fund also maintained surprisingly healthy NAV appreciation while producing massive income along the way. And honestly, this is one of the clearest examples I've found showing the high income and strong compounding can actually coexist. So stay tuned. Welcome back to Simply Money. Today, we're diving into AMDW using the drip score and the income versus decay ratio to answer one very important question. Did reinvesting the distributions actually create more long-term wealth than simply taking the income as cash? Because after building the spreadsheet system and running the numbers across dozens of income ETFs, I discovered something really interesting. Not all high-yield ETFs have behaved the same way. Some funds generate huge income while quietly destroying long-term compounding underneath the surface. Others look risky on paper, but actually create incredibly strong drip environments. I think this is where people get confused. It's just like finances in general. Everybody thinks there's one definitive answer. How much do I need to retire? Well, it depends how much do you need to live on. How much can I withdraw? 4%? 8%? What's the difference? How do I know? There's so many different questions for every individual. People ask me all the time, well, what are the tax implications? I don't know. How much do you earn? Are you married? Are you single? Where do you live? What state are you in? Do you have your investments in a Roth, a regular traditional IRA, and a 401k, and a regular brokerage? There's so many different variables. You can't just answer it with one question. And with picking ETFs, just asking what's the yield is not always the right question. We're going to walk through the full drip results, a 50% drip versus no drip, and total return comparisons. We're going to look at yield on cost growth. We're going to look at NAV behavior and why AMDW scored so highly in the drip score system. Then at the end, I'll compare AMDW directly against other ETFs on the full drip score summary dashboard to see where it actually ranks. AMDW is a high-income weekly paying ETF designed to generate aggressive income through option strategies tied to AMD stock performance. The fund focuses on producing enhanced cash flow by using covered call style option strategies, which allows it to pay extremely high weekly distributions compared to traditional dividend ETFs. What makes AMDW interesting is that it combines exposure to the volatility of AMD, very high income potential, and frequent weekly payouts. But like many high-yield option income ETFs, the big question becomes, can the income actually overcome potential NAV decay over time? And that's exactly what we're going to test today using the drip score and the income versus decay ratio framework. So let's dive in. What we have here is our drip sheet. And this one is for AMDW. We have the date right here. If you'd like a copy of the AMDW drip sheet, you can get a copy down in the link below at the Buy Me a Coffee link in the description. And we'll also look at the drip score and income ratio sheet, and this has the summary. I'm showing you on the drip score full worksheet, but these individual drip sheets are all available for those who only want one drip sheet. You can buy them separately. This is a combined package with all the different drip sheets that I have and the summary that has the score. That's very important. But we're going to be looking at this as an individual fund today. And on this sheet, if you were to get this sheet, you can change the date here. So if you bought it in October, November, you can put that date there. It'll update the price. This pays weekly. Here's your symbol. With $50,000 invested, you would have got 895 shares. And on this, you can just come down, you see the date that the distribution was paid, and then it shows what the share price was at the close of that business day. I want to clarify that every brokerage is different. I actually have two. I have one for my wife that the distribution is made and then it is bought at the end of the business day. I have one for myself where the distribution is made and then it is bought the next business day in the morning. If you have it on drip automatically, and every brokerage is different. If you do it manually, when that becomes available may be slightly different. What I do, and this isn't going to be perfect because nothing is. These are tools for you to use. Let me pause there by saying this is not financial advice. This is for informational and educational purposes only. I'm not telling you to buy AMDW or not to. This is to provide you the data for you to see what it is, what it's done, and for you to make an informed decision and do your own due diligence. Now, with this sheet, it shows you the share price at the close of business. And there's going to be some surprising things you're going to see on the summary sheet, so don't click away quite yet. As we come down, you see over here on column C what the distribution per share was on that date. And then we see how much you got paid based on the number of shares you own. And this is the full drip. So the first one here is $535. It paid you. We're fully dripping. So we bought more shares. Now we're up to 905 shares. This one here is your 50% drip. Means that this amount is doubled. So you got $267 for cash, but you're taking $267 and dripping it. And so you bought more shares. You're up to 900 shares. That's what you started with, $895. With full drip, it all went back and you bought more shares. You got 10 more shares. With 50% drip, you took $267 for cash, and then you took $267 and bought 5 more shares. And you can see that accumulating here in these two columns. Now with zero drip, you get the $535 and you take it, it's cash. You don't buy any more shares. Your share count always stays with whatever it is at the initial buy. Then over here, you can see what your balance is for full drip, 50% drip, and no drip as you come down the columns, and we can track that. And then over here in this column, L, is when you got this distribution, what is the yield for that particular week? For that payment, the yield was 55%. As you can see, the next week, the price went down, the yield went way up, so you had 130% yield that week. The next week, the yield stayed about the same, the price dropped significantly, and you got 118% yield. And you can see that fluctuates quite a bit with AMDW. And see your payments week to week fluctuating dramatically, whether you're taking cash. If I was taking this drip, this week I got $535 and I got $1,200, $1,000, $500. Oop, only $269. If I'm relying on this to be consistent, you need to be careful. And that's where a lot of these distributions can be very back and forth from one week or 1 month to another. And you have to be careful if you're relying on that for income. As you come down these columns, you can see the various strengths and weaknesses. You can see the dips and then the booms. See, we got down to $44 here, then crept up a little bit. Then look here, it boomed up to $72. Let's look at that one right here. $72, paid $1.49 a share. If you're taking full drip, you would have got almost $1,600 that week and bought more shares. Now you're up to $1,085. You're up almost 200 shares right here. Your portfolio balance is up to $78,000. You're up $28,000 in this short period of time, just a few months. Phenomenal growth. Even with taking the cash, you'd be up $14,000 at this point. But you can see the share price starts dropping again, but then it starts coming up a little bit. Oh, now we go down. We got down to $42 in February, $39. Oh no, the NAV Decay it's killing us. Whoa, wait a minute. We're up to $95. See, this is where we have to watch things. Now, I'm not saying not to panic. I'm not saying not to get out of certain things. But why I do these sheets, especially funds that we have long-term data for, this is a short term. This is not even a year long. So this is, in the investing world, this is short time. We're just looking at it going, it can stay down for a long time. It has bounced a lot in just this short time. But people panic, and I've showed this a lot on SCHD and SCHG on these sheets that you can see where it drops dramatically and people panic and they lock in the losses by selling, and then when it rebounds, they miss it. What people fear with these funds is, will it rebound? Well, this here kind of tells me it did pretty good. It got some of that upside. Did it get all of the upside if you compare it to AMD? No. But AMD is also not paying you this consistent distribution as well. So as it's going down, you're also getting distribution. And for those who are dripping, you're getting this massive drip in reinvesting and gaining more and more shares. Look at this. You got 633 more shares. So now your last payment was almost $2,600 for the week. And look at your balance. You're up to 143,000. It dropped down a little bit this last week, but it's okay. That's the thing. The stock market's not linear. It's not go up, up. If you want a linear growth, put your money in a savings account, put your money in a CD, and it'll be safe. But if you don't understand the difference of compounding and savings and compounding investing, you need to watch the video I have. Just search it on the YouTube channel I have on compounding, and you'll see this one, and it shows savers versus investors and the big difference it makes. And I'm here to encourage you not to be risky and just gamble it away, but you do need to do some investing, whether it's super safe investing like the S&P 500 or something simple, at least outpace inflation. That's all I'm really trying to encourage you to do. Now, if you want to get into some income players and different things, that's what we talk about a lot on this channel. There's a lot of opportunity there, but you do have to be more careful. And you can see how this has grown. We'll just cover this real quick. If you did dripping, you've added $36,000. Again, you gained 633 shares. Your portfolio grew by $80,000. $50,000 has turned into $130,000 in less than a year in unrealized gains. You don't gain anything because this is just sitting there, just like the S&P 500 or whatever. You have to sell shares if you want to get this, or turn off the drip and start taking this cash on 1,528 shares instead of 895 shares. Look at the difference. If I turned off drip in less than a year, I'm getting $1,000 more this week, $600 more this week, $700 more this week. Why? Because if I turn drip off now, I'm getting the same distribution on a whole lot more shares. That's why a lot of people, what they do if they want income, they'll start a little bit before they're ready to use it to build up some shares. They'll drip and they'll drip. But is that always the best thing? Some of these, and we've seen it in other videos, and I'll show you in a minute, sometimes dripping is actually worse. You do worse by dripping than if you took the cash. So that's why we created this spreadsheet for you. Down here, you can see your total return and what you have going on there. Now, I want to show you a couple things on this drip sheet for those who have never seen them before. Right here, you can put in whatever amount you want. Let me highlight that nice and yellow, this one yellow. So maybe I want to drip 40% and then I'll keep 60%. You can change this. You can put 20%, whatever you want to put. Instead of just the standard drip, 50% or no drip, you can do every increment you want in there and see how it works out. And then it shows you your totals down here. And this one's really handy because you can go in here. If say you wanted $400 a week, you have $1,600 a month for rent. You put that $50,000 in, you want that to produce the income for you. Or you just want it to produce income and you just need $400 a week to supplement your Social Security or something. You have that. The rest is being reinvested. It totals everything up down here. That is what this drip sheet will do, kind of help you see how does it grow in different scenarios. But that is only part of the question. People want to know, should I buy this? Or if I buy it, should I drip or not drip? And that's where the Simply Money Drip Score dashboard comes in. This summary sheet, and this is, again, the Simply Money Drip Score on Buy Me a Coffee. You can get a copy. It has all of these tickers. You can see them all right here. And it shows you the price appreciation. Each one has its own individual drip sheet, so you don't have to buy them individually. You get them all that are listed here. You see the total, the price appreciation, the total return for full drip, 50% drip, no drip. You got your yield on cost, whether it's full drip, the whole 9 yards here. Then over here, it shows you what the average yield is paying. So you can look, like if I'm looking at AMDW and say, oh man, pays 66% yield, it must be a bust. The NAV must be eroding. And I look over here, price appreciation, positive 52. Are you kidding me? And that's what this score here tells us. The drip score, the green, tells us that it's positive, meaning you do better by dripping. You can see dripping, 160%. Not dripping, 107% total return. Still great both ways, but lets you know if you want a higher total return, that dripping is better. We'll just look real quick, the one below it. You did better by taking the cash. 123% total return by taking the cash, only 106% by dripping. So that's how this can help you know, should I drip? Should I take the income? And then this, the income versus decay ratio, lets you know if it's decaying, it's going to be green, red, or yellow. Green means it's decaying, but slower than the yield is paying. Yellow means it's borderline. Some weeks, some months, depending, it might be decaying more, it might be decaying less. You have to watch it. It's right on the border. The decay might be outpacing the income, and that'd be yellow. Red means it's definitely decaying faster than the yield. We have one right here with Coney. You can see that the income is not keeping up, so it is decaying faster than it is paying yield, and that's something you have to watch out for. So AMDW, what is this? Purple, $9.99, means there's no decay. Remember, this is income versus decay. If it's decaying, red negative over here, you're going to see green, yellow, or red. But if it's positive, meaning it's not only paying a yield, it's also growing its share price, and that'll be purple. If you see high green and purple, you're getting a high yield, you're doing better with drip, and you're getting price appreciation. This gives you a little scorecard, ability to look and compare and ask more questions than just simple, what's the yield? Or how much do I make if I drip? You need to ask, should I drip? Should I not drip? Is the decay faster than the income? And this keeps an updated live running of all of these. Each time each of these funds pays a distribution, the individual drip sheet will update, and this will update and recalculate, and you'll see that these colors may change if things change. So you can be monitoring. If you own these, say these first 5 stocks, and you're watching them, you can say, well, this one's, let's find one that's close here. Let's look right here. You got 142. Okay, it's doing great. We have we're in positive growth. JEPI, we've grown 44.44% in appreciation. So it's positive, may not be positive high. Should I drip or not drip? That's very close. Dripping outpaced not dripping by 1.42%. And that could change from month to month, and we'd want to monitor that. This just gives you an ability to keep track of that and to research and watch other funds you want to see. And you can see we have about 49 funds on there right now, and I'll be adding more down the road. I try to keep adding things, and that's where I appreciate your support. It helps me be able to do that. This takes a lot of time, updating these, taking the individual requests. I appreciate all your support. Tell me what you think of AMDW. Do you like it? Not like it? Don't forget to grab your copy of these, of either the individual drip or the full program of the drip score dashboard here. We have a lot of tools for you, but my biggest ask is hit that like and subscribe button and leave us some comments, dialogue a little bit. That really helps us more than anything. And I appreciate all you do. Thank you for being part of this community, and we'll see you next time on Simply Money.